So it was trading at roughly 168, 170 rupees and it corrected by almost 55%. That the valuations have somewhat come down to a sensible levels. Hi everyone, welcome to today's video. So on today's video, I am going to show you live investment of 10 lakh rupees and I'm going to do this investment in 3 specific stocks. Some of these are new for me. Some of these I'm aggregating and building on my positions. So I will discuss that. I will also talk about why am I bullish about these stocks and why have I decided to purchase these stocks at this juncture. Very important 2 key points. First and foremost, this is not a recommendation. I'm genuinely telling you whatever I'm doing in the market. If it makes sense to you, then only consider taking positions in it. Second, and very important point, all these 3 stocks are slightly volatile in nature. So it's not as if that this is a guaranteed return opportunity, but I'm betting on at least 2 of these stocks to succeed. So even if 2 stocks become big going forward in the future, it will give me enough returns to compensate for the loss that one of these stocks is generating. So that is the viewpoint with which I'm shooting this video. So please understand that these are risky, volatile investment opportunities. So let us get the discussion started. 4 specific parts. 1, I will speak about the macros of the market as of now, that what is the mood of the market in a very summarized manner. Then I will talk about 3 specific stocks, the pros and cons associated with them. Also a very quick shout out to our sponsors, which is SmallCase. I have created a separate SmallCase list of good stocks. I do not balance this SmallCase. It is not charged. You can just go and check out list of good stocks that you can start researching about. So I just keep on adding more to this list. This is not a rebalanced SmallCase. You can check the links in the description box in case you are interested in exploring that list of stock. So first part, let me talk about the macros of the market. There are 3 key trends that are playing out in the market right now. It is important for you to understand these 3 key trends because it can help you somewhat time your investments in a way. So let me give you a very quick commentary on these. So if you look around in the market, the first key point that you will realize is that the markets have been moving sideways. I have been saying this for the last 4-5 months now that the markets are going to move sideways, and that is precisely what is happening. Sideways movement simply means that this is an upward movement and the market keeps going up. Downward movement means that the market keeps going down, and sideways means that it just keeps moving in a range. So in India, that range for Nifty 50 would be somewhere around 15,800 to 18,200, and between this range the market is moving. So what can you draw out of this? If you feel that the market has somewhat corrected and if it is hitting the lower range, which is around 16,000, 16,500, you could consider taking more aggressive positions. And if you feel that the markets are making it stop, which is temporarily making it at 18,200 levels, you can lighten your positions in the stock. So this is the first key trend that is playing out in the market. The second key trend that is playing out in the market is that we are in a period of high inflation and this period is going to stay sustained. So it is going to continue. Very important lesson that please do not keep your money in fixed deposits, bank accounts. It is just not going to compensate you for the returns that these instruments are giving. Your wealth will get wiped out. So it is very important in a high inflation environment to invest. This is not just my viewpoint. This is Mr. Ray Dalio's viewpoint as well. And you might have seen this play out in 2020 COVID crisis. That when the first round of quantitative easing or excess money printing started, the inflation shot up and all the asset classes, including stocks, went up. But people who were sitting on cash, they lost a lot of money. So please remember this point. Right now, the situation is that back in November, the US monthly inflation data was around 7.5%. And that was after 45 years that the inflation became so high. Recently, the numbers were announced last week. And now we are hitting an inflation of 8.5%, which is very high. So as an investor, please understand that if you keep a lot of your money liquid, you are going to undertake a lot of loss. Third and final point, that a lot of bad news has been factored into the economy already. A lot of hoopla has been created, supply chain disruption, commodity price rise, Russia-Ukraine war, bad stuff. And a lot of it has already been factored into the market. And the markets have not crashed. Can they crash? Of course they can. 5-10% correction in this type of a high volatile environment can come anytime. Absolutely anytime, and it can come for no reason also. So please be prepared to deal with that 10% volatility on your portfolio. That can happen. Why can that happen? Because the Feds will keep on moving the macro interest rate and there will be missing of targets. For example, the inflation target will be set that hey, in India, the inflation will be 6.5%. But it turns out that inflation data indicates 7.5%. Then market will fall by 5%. So this type of game will keep on happening both nationally in India also and internationally also. So I hope that with this perspective in mind, you will go and pick good stocks to invest in. Now let me start sharing 3 stocks that I'm bullish about. The first stock, I'm going to get a lot of heat. It is Zomato. Now, why am I bullish on Zomato at this juncture in time? So, there are 4 key reasons. But before jumping into Zomato, many of you would say that Akshat, you were a critic of Zomato, this, that. Now you're changing your position. Yes. At what point am I changing my position? When I was a critic of Zomato, Zomato was trading at 125, 130, 140 rupees. Now it is trading at 80, 85 rupees. So there is a huge crash also. So please remember that a valuation of a decent company starts hitting sensible numbers, then I will turn my position, of course, as any sensible investor would do. So with that viewpoint in mind, let me outline my 4 big reasons as to why I believe that Zomato stock can become really good from this point. So the first key big reason is that the price of Zomato has crashed by a lot. So it was trading at roughly 168, 170 rupees and it corrected by almost 55%. There was a fall of 55%. Then the stock started recovering and it has recovered by how much? It has recovered by approximately 15-16%. So this is the first part, that the valuations have somewhat come down to a sensible levels. The second key point is that the stock has been consolidating for some time now and it is okay to take initial positions in it as per my understanding. Again, please, not an investment advice. Please do whatever your analysis tells you. I'm genuinely telling you whatever I have analyzed about the stock. Now, in addition to this price fall, if you zoom out and see about the entire ecosystem of startups and firms that have recently IPO'd after being a startup, you will figure out some key trends that are playing out. The first key trend is that there is a lot of firing that is happening in the startup space. For example, recently Unacademy, Meesho, they fired a lot of employees, a lot of criticism. That's point one. Second point, that fresh funding is drying up. Why? Because a lot of money that was coming from foreign markets into the Indian startup space, that is not coming in at the same pace. So as a result, many companies have cut down their valuations. Many companies have merged. For example, there was a company Blinkit, which is Grofers. It merged with Zomato and it was an all equity deal. So a publicly listed company acquired a loss-making company. Is that good? Is that bad? Probably a separate video on that. But the point that I'm trying to outline is that there is some kind of credit crunch that is happening in the startup space as of now. Third and finally, you will see IPO delays. A lot of companies that were planning on launching the 2022 IPO, they are pushing it to 2023 now. They want to reassess the environment. Now you will say that Akshat, you're telling all negative news. So why should we go and invest in Zomato? The reason is that this system is being played out for a while now. This is not something new. These are all negative news that has been factored in, right? So this has already been factored into the stocks of Paytm, Zomato, etc., etc. And they have corrected. That is the reason why there was a 55% fall on Zomato stock. Now, if it is consolidating, it means that all this negative news is getting factored in. So probably from a valuation perspective, it might be the right time to start taking some positions in it. To be very honest, no one can value these companies properly. No one knows how these companies will unfold. Everyone is guessing that, you know what, the fair price of Zomato should be this, fair price of Zomato should be 130, it should be 40. No one knows that for sure. Markets tell us what the fair value of a particular stock is. And I feel that it might not be a bad time to go and invest like 10% of capital in case you want to take positions in something like Zomato as of now. Please do not invest things in bulk in something like Zomato. Number 2 reason why I'm bullish about Zomato is that it has started to rationalize its own cost. It has started to look at its own cost structure. This again is a larger ecosystem driven thing that a lot of company founders, for example, Mr. Vijay Shekhar Sharma recently made an announcement that, hey, we are focusing on profitability as of now. Zomato is also trying to figure out its profitability equation. Gone are the days when these companies were just focusing on revenues. That game is not generating fruitful results for these companies anymore. They have reached a stage where they need to think about profitability, and Zomato is doing it. So take a look at this particular chart. It shows advertisement spent as a percentage of total sales. So you will see that the total spent on advertising is coming down. And tell me in the comment box, where do these recently listed IPOs or startups spend most of their money? They spend it on advertising. So now if the user base is not getting impacted or there is a slight drop in user base, but the profitability is going up because the marketing spent is going down, it's a good sign for a company like Zomato. So it shows that the focus of the company is now turning towards ensuring profitability. Now this brings us to reason number 3 to invest in Zomato, that if you look at the food tech delivery space right now, it is very evident that Zomato or Swiggy is going to win this race. Now, here is a very interesting article that I read, which outlines the fact that going forward, Zomato and Swiggy are preparing for a consolidation. This is not a proven news. This is just a speculation, but there is very, very high chance now that both Zomato and Swiggy are going to consolidate at some stage, because both are fighting with each other like crazy. They have already burnt a lot of investor money. SoftBank is the common equity investor across both these companies, and it is expected that at some stage Zomato and Swiggy are going to collaborate together, and that is when the stock price of Zomato will skyrocket. Because that would be the end of discounting phase or crazy discounting phase. In fact, crazy discounts have already ended. Now, whatever little discounts are left, it will be squeezed out the moment Swiggy and Zomato join hands and join forces. Will it be easy to do? I don't know what the speculations around it is, but some news is going to come out on this. That is what I strongly feel after studying the Zomato and Swiggy business model, that they are going to merge at some point, because the winners take all market game is not working out in the food delivery space. Both Zomato and Swiggy have become too big, and this war can drag on for years and probably a decade, and that will be the end of both companies. So from that particular perspective, it might make sense for them to join forces. When will this happen? I don't know, maybe 1 year, 2 year, 3 year. But right now, given the sensible valuations or somewhat sensible valuations, it might not be a bad time to take a little bit of speculative bets here. Now comes the fourth and final point, that Zomato is actually amping up its logistics delivery model. For example, there has been a lot of debate, criticism around its 10-minute delivery model. But think about it this way, that when it comes to other food delivery networks or brands, for example, Domino's or Dunkin' Donuts, they can't deliver stuff in 10 minutes. Now, if Zomato or Swiggy are able to crack this 10-minute hot food delivery model, at whatever cost it comes, it's an extremely convenient thing for customers. And guess what customers love? They love convenience. Yes, a lot of people will say that, you know what, there will be accidents, this, that. Please watch the 10-minute delivery video that I have made. It works through our network of dark stores. There are no substantial problems with that model. Yes, it is cost expensive as of now. But if someone cracks the code, it's hugely convenient for the customers, and customers will eventually move to convenience. This becomes like a massive competitive advantage for a company like Zomato. Final points on Zomato, that please don't go and invest all your money in one go. Please invest little bit of money only. That's point one, and build your position. Number two, you don't need to invest right away. You can wait for the company to turn profitable, or Swiggy Zomato news of merger coming out, etc. and you can take some positions then. And third and finally, please expect volatility on this stock. If you can't hold this stock with a loss of 15-20%, please do not invest in it. Okay, with that said, let's move on to stock number 2, which is AU Small Finance Bank. Now, there are 4 specific reasons why I'm bullish about AU Small Finance Bank. One is the credit growth market that is happening in India as of now. Now, you can understand this point in 2 parts. One, there is a lot of news around the fact that India will grow from an economy where people are making $2,000 on an average to $4,000. So the amount of capital gets doubled that people hold. So as a result, all the banks will grow. Do I agree with this analysis? The answer is 100% yes. Because if the credit market is growing in India, plus a lot of people are talking about taking debit cards, that I will have like 500 debit cards and I will live on airport only, on a lounge only. Why should I rent a house? I will have like 500 debit cards and credit cards and I will live on a lounge. Yeah, great life for me. So probably people are believing in all this stuff, BNPL, credit card, debit card, and these markets are growing like crazy. Guess what? Who supports this at the back end? It's the banking system. So banks are likely to grow. Additional second point here is that right now, from a short to mid-term perspective, what has happened is that after COVID, there was contraction of the economy. Now economies are expanding. Sometimes, yes, it expands a little bit, then it shrinks a little bit, but general trend is that it is expanding, and as a result, the credit cycle is picking up. What happens first is that the price of raw material goes up first. That indicates industry demand. And if industry is buying all this raw material at high prices, what is it going to do? It is going to process it. And how is it going to process it? By taking on more capital from banks. So banks become an extremely profitable business. So this is the first viewpoint, and this is also reflected on their revenue growth. So you can clearly see the rate at which the revenues are growing, the rate at which the profits are growing. This is unprecedented. The rate at which this bank is growing, it is crazy. It is like extremely good. I am already an investor in this bank, as I have disclosed in some of my previous videos, but I have started to take more of the positions at slightly more premium prices. Now, the second key reason why I'm bullish on AU Small Finance Bank is that it is present within a growth industry. What do I mean? That if you take a look at banking, that when it comes to HDFC, ICICI, Axis Bank, they are catering to grade A customers who are city-based, mostly urban centers. But if you go to small finance banks like AU Small Finance, Equitas Small Finance, they are catering to rural economies more. But the winning advantage for AU Small Finance is that it is able to borrow from the urban market and lend it to the rural market. So that's a genius model. They call it the Robin Hood model, as you can see from this particular graphic, and this model has been working out well for them. Why? This brings us to the third point, that AU Small Finance Bank is excellent when it comes to risk management and risk mitigation. In fact, if you study the history of AU Small Finance Bank, you will see that Mr. Agrawal, who runs the AU Small Finance Bank, he has been deeply influenced by HDFC Bank. Back in 1996, AU Small Finance Bank was working as an NBFC, and it was a partnership with HDFC Bank in 2003. And it became a turning point for the bank. And Mr. Agrawal says that I owe this bank to the HDFC Bank partnership. The 5-year association ushered in money, patience, corporate way of thinking, and a belief that they could grow big too. He says, we copy HDFC Bank, to be very honest. Now, that's a very candid statement, and it shows the intent with which this bank is running. It is running on good governance. It has shown growth, and it has carved out a niche for itself. So as the rural economies grow, something like AU Small Finance can become a rocket, and it has already started to do that. Am I saying that go pour all your money in? No, but please at least go and study this stock. This is a very good stock, and if you feel confident, then start taking positions in a balanced way. Please don't go and invest all your money by selling your house in AU Small Finance Bank. That is not how you buy stocks. Now, if you study the business model of AU Small Finance Bank, and here is a chart for you that shows the split between treasury, retail banking, wholesale banking, you will see a couple of really good points. One is, take a look at this particular chart. It categorically shows that 75% of the loans that AU Small Finance gives, those are secured loans and vehicles loans. That the loans that they are giving out, they are somewhat secured or slightly more secure compared to the loans that are given out by other banks. The second key point, that take a look at this particular graphic. AU Small Finance Bank has been very, very vocal in terms of building its business in conjunction with merchants. You might have seen these QR codes that small vendors, etc. use, and AU Small Finance has extended a lot of partnership on this front. So they are trying to win a lot of business with merchants, and merchants end up taking a lot of business loan also, and that is how the entire equation is getting played out. So the small business loan segment for AU Small Finance is growing at a rapid pace. Now comes the final stock about which I am bullish. Again, it's a bank, and it is IDFC First. Why am I bullish about this stock? Again, first point was around the credit cycle, applicable to AU Small Finance Bank also, and IDFC First Bank also. The second key reason why I'm bullish about IDFC First Bank is, call me biased, but I'm a big fan of Mr. Vaidyanathan, who runs the IDFC First Bank. He's one of my top 2 favorite leaders when it comes to the banking industry. One is Mr. Aditya Puri and one is Mr. V. Vaidyanathan. I would like to invite him for a YouTube chat if he agrees to that. So I'll try to reach out to him. But a big fan, the type of work that he does is truly amazing. These are some of the snippets that you might have read about his work. The way he's running IDFC First Bank, it's commendable. So that is the personal side of things, but let us start getting into the analytical side of things. So basically, IDFC First Bank, before Mr. Vaidyanathan took over the charge, it was dealing with legacy problems. So legacy problems means, you can see from this particular graphic that companies like Vodafone, they took a lot of loans from IDFC and it turned into a bad debt. But IDFC First has been able to recover a part of this loan. And according to Mr. Vaidyanathan, the legacy problem has gone away. Majority of it has gone away. He still says that there might be a couple of accounts that can cause a little bit of distress for them, but the quantum of that problem is very limited. So you might ask me a very relevant question here, that, hey Akshat, then why is it that you're investing in IDFC First as of now? Because they hold some risky amounts at least. So the answer there is very simple, that all the banking systems went through a crisis period when there was 2020 COVID, when there was 2021/2022 war between Russia and Ukraine. Now, if these banks have not defaulted and if those NPAs have not been uncovered yet, then probably things are okay from a banking fundamentals viewpoint. Can these debt turn into bad debts going forward? Absolutely, because the cycle of these NPA becomes really, really long. So very hard to predict. But net, the rate at which the IDFC First Bank is growing, and let me show you the charts around it, you will be impressed with the growth in revenues. They are able to attract new accounts, win new businesses, and keep their customer retention high. Now you might take a look at the net profits and you might get worried that, Akshat, some years these numbers are high, it's positive, and some years these numbers are low, it's negative. Why is that? Because the listing of IDFC First happened in 2015. It's not a very old bank per se. So there is a lot of room to grow. And IDFC First has gone on to an expansion spree in terms of opening more offices, opening more ATMs. So this brand building exercise costs a lot of money. And according to Mr. Vaidyanathan, that once this brand building exercise is done, there is more recognition for the bank. The customers stay put, and that is when the hockey stick curve happens. Hockey stick curve simply means that the initial 4, 5, 7 years, the bank stays unprofitable, so to say. But after that, there is sudden spike in profits because the revenues that the bank is making, it gets to keep a big chunk of it as profits. Now, this is further corroborated by the next point, that the retail liabilities, and you can read this entire section here, that the retail liabilities of the bank is coming down. And if you take a look at its operational metrics, for example, if you take a look at net interest margin, it has been constantly going up. If you take a look at CASA ratio, it has been constantly going up. CASA ratio simply means current account, saving account, deposit. So this is the most useful form of capital that the banks get. That when you go and deposit your money in savings account, bank is only giving you 2% interest rate. So that's the cheapest source of fund that the bank has. So the better CASA ratio that the bank has, the better it is for it. And this CASA ratio has been going up and up. Gross NPA has been coming down. CASA versus liability has been stagnated. It has already improved. So net from an operational viewpoint also, the bank is doing fairly well. So in summary, before I let you go, this is me making a live investment on all these three stocks. The key message that I want to drive home right now is that number one, because of the high inflation environment, please don't stop investing in the stock market, because if you stop investing, then it becomes a problem for you. Inflation eats into your money. Pick good opportunities. There is no race going on here that you need to invest in Zomato tomorrow only or IDFC First Bank tomorrow only. No race. Whenever you feel confident, please go and take positions if you like. Third and finally, please build your positions, especially on newer age banks or new banks like IDFC First, AU Small Finance Bank, Zomato like companies. You can't treat these stocks as defensive stocks. These are highly volatile stocks. So please invest only if you are okay seeing your portfolio fluctuate and if you're okay with the volatility that comes with investing in such stocks. I hope you enjoyed the video and I will see you tomorrow.